Hello traders, welcome to Trade Forex with Gabe, and my name is Gabriel Ujimada. This is the weekly Forex forecast, and we'll be looking at market setups and trade opportunities for December 11th through to December the 15th. Last week, I took a little break and I didn't publish any forecast for the week, but then we're back on track. So this week promises to be a very volatile week, as we'll be having about 3 interest rate decisions and CPI data affecting the dollar. Well, let's start by looking at those decisions, as this is one of those weeks. I will say, as always, one doesn't have to be a superhero trading into the week. But then I will be walking you through my thoughts on how to navigate the market into the pitfalls that these markets have for us. Okay, so starting on Monday, we will be seeing the RBA governor speak, and then on Tuesday we'll see CPI data to affect the US dollar. That's the start of the volatile week. And then on Wednesday we'll see FOMC decision. That's the interest rate decisions, where the Feds are expected to maintain rate at 5.5% rate. And on same Wednesday, we'll see GDP data on 8 a.m. coming out to affect Great Britain pounds. And then we'll also see GDP data affecting New Zealand dollar later in the day. On Thursday, we will be having about 2 interest rate decisions, or 3. First, from the Swiss National Bank, where they expected also to maintain rate at 1.75 percentage. We'll also see monetary policy rate from the official bank rate for Great Britain pounds. And then we will also have the refinancing rates affecting euros. So that's about 4 interest rate decisions for the week. On Friday, we'll see CPI data. We'll see CPI data affecting Euro, GBP, and USD. That's the flash PMI data. So this week really loaded with a lot of decisions. So let's look at what the setups are by starting off by looking at the indicator that is the currency strength indicator, and see exactly what it is telling us how to navigate the week. You will see that the market is flat. Not much of a movement is expected because a lot is being anticipated, because trading interest rate decisions is more like gambling, because even if you get it right, sometimes markets can move in the other direction, sometimes being discounted or whatever. So sometimes it's not about how well you can predict what the rates are going to come out to be. But so far, you can see that the rates, the strength across board is next to neutral. So there is not much of a volatility into the market, and so all setups will really be, every trader has to be really careful in terms of how they will approach the market. I mean, the indicators are showing that something huge is happening in the market, and of course the economic forecast is already telling us we have 4 interest rate decisions and then the CPI data. But then let's still walk in a bit deeper in it to see if we can find some opportunities. Now let's cross match this from last week, which was December 1st through to 8th. We see Swiss franc losing strength, and we see Swiss franc losing strength there. Then we talk about what do you call it now, NZD. Now Swiss franc, of course, for this week is looking to be the best bet to trade. We see how Japanese yen moved from a negative 2.2 moving into 0.0. At least it's still positive in this case. So but I'm still not going to be focused on it. The volatility across in Japanese yen is much too much at the moment. So Swiss franc is still the best bet into the week, but then look at how much it lost. 1.5, now 0.3, almost sliding into the negative region. Gold also losing some strength there after creating a new high, all-time high, now sliding back to 0.1. We see NZD from 0.4 now losing some strength to 0.6, and then we see Great Britain pound from 0.5 losing further strength to negative 1.2. Australian dollar gained from negative 2.1 to negative 1.5, and then Canadian dollar gained some strength from negative 2.1 to negative 1.7, but then I still see it as one of the best shots into the week. And then we see dollar moving from negative 2.2 to negative 2.1, and euro making being at the lowest ebb of the negative strength index. So pretty much a difficult decision here. So, but I will walk you through what the technicals are saying, because in this case, we'll have to either, the strategy will either be go in and out before the interest rate decisions, or trade the fake outs from the interest rates after the interest rate decision. So what I'm looking at trading first is the Swiss franc pairs, and my best pair really is still Canadian dollar Swiss franc. This will be the best pair I will be looking to trade. Last week it ranged all through, so I want to believe maybe this week we will be having a little bit of a volatility into the market. Then I'll also be looking to trade Euro Swiss franc, NZD Swiss franc, Australian dollar Swiss franc, all looking to go short, but then being mindful of interest rate decision that will be coming out on the SNB, that's the Swiss National Bank. On Canadian dollar, I also like the pair NZDCAD, because this is purely on price action. I'm looking to go long on this, although NZD and Canadian dollar are on the negative region, but then based on price action, it's looking it appears to play out very well to the upside. And then on commodities, I'll be looking to trade oil, WTI, that's West Texas Intermediaries, looking to go short on it. So best pairs for me into the week are same ones, which is Swiss franc, Canadian pairs, and then going to commodities. So let's look at what the markets are saying exactly, starting with Canadian dollar Swiss franc. So just to the close of last week, we saw that loss in strength on Swiss franc, and we see the rally. But throughout the week, you could see how this ranged all through. The previous week, we traded this pair. It's broke out of the range. The channel gave us our profit target, but into the new week again, it ranged and then made a retracement, but well, couldn't create a new high. So what I'm looking at into this week is to look for a selling opportunity that's to go short on it again, and I'm looking to achieve the last low. So what I will look to achieve here is at least price should sell off and achieve the last low here. So how many pips would that be? Let's look at it together. So from this point down to the last low will be 71 pips. Okay, that will be 71 pips. Now, don't forget, this is one of those pairs I told you on the long term, I'm looking to be short on it. That's CAD Swiss franc. Because I see here we have a breakout from this channel. So peradventure, we have with Swiss franc losing further strength, we could see now more further correction into 0.6532, but I either short this or do nothing. I'm not looking to go long on it in any way. Okay, so this is one of the best pairs for me. I'll be looking to trade, but don't forget we have this interest rate decision on Swiss franc, which will be on Thursday. So anything between now up to Wednesday, Canadian Swiss franc will be one pair I'll keep an eye on to see exactly how it will play out for me. Then let's move on to Euro Swiss franc. Euro Swiss franc. So on Euro Swiss franc, I'm looking to go short on this, and the trade is for me is to wait for some level of retracement. We're already beginning to see that correction already after this massive sell-off we had the previous week. So what I'm looking to achieve here is price to give me some retracement into this key level of resistance around the 0.9540 level. Then I'll start looking for a break in structure towards the last low, which is 0.9405 level. Now, if price begins to sell off from here, you can see what we're looking to achieve is about 67 pips, but we have another correction potential of 67 pips to the upside. So we'll watch to see how this plays out. But look at the bigger picture, what informs our decision to go looking for a short opportunity. Now the structure on the D1 is to the downside. So what we expect after this massive sell-off here is that price should give us some level of retracement. So if you pull up your Fibonacci retracement tool, so let's take it from here down to this low. So any retracement around the 31 and 50 level, and that's exactly the same level I gave to us. If we see price retrace up to this level, the 38.50, probably 61, but I don't believe it will get there. I think it will make a stop around the 50 Fibonacci level. Then we begin to look for short positions. So this will be my trade. This will be my bias on this particular pair, Euro Swiss franc. Okay, let's look at NZD Swiss franc. That's another interesting pair I looked up. So let me get it out. NZD Swiss franc. So NZD Swiss franc, I'm looking to go short on it also. Now, look at it from the bigger picture so you can understand how we formed this idea. So price or market structure has been to the downside. We'll be having lower lows, lower highs. And right now we see price consolidating around this key level. Now this key level, we traded it some time ago after we had this double top pattern, made a nice sell-off. And right now we see price consolidating again, and this is conforming to the upper boundary of this channel that's on D1. If you go down to H4, which is where we are right now, you see that we are having another channel. So what I would like to see is a breakaway from this channel, and that will give me a very good bias to enter a trade short in the direction of going down towards the 0.5184 level. So if we're taking the profit targets, if we see a breakout from this channel, it will almost correspond to the low, okay, or somewhere around 51.84 level. So let me give a second one. So on the conservative, this will be where my first profit target will be once we see this breakout. Okay, so NZD Swiss franc, we already have where we anticipate we have the trigger points. The name is the trigger point, so that's where we expect it to be. And then last on Swiss franc pairs is Australian dollar Swiss franc. Australian dollar Swiss franc, we're also looking to go short on this. On daily, which is the current time frame, you can see that the structure is to the downside. We're having price consolidate again within a channel. So what I would like to see is to go short on this pair. So let's see if price is able to make if price is able to give us a further correction to the upper boundary, then this is a good or fantastic place to look for shorts. Don't forget, all of this is to be traded before Thursday interest rate decision by the Swiss National Bank. So because if we get a breakout, an intense breakout from this channel, I'm only looking to go short on this. So I won't be looking to go long. So even if the interest rate decision favors the market, favors this particular pair to the upside, what I would like to see is to fade it. I would like to trade the fake out of that interest rate. So even if we get a rally and we get a pulse around the upper boundary of this channel, then I'll start looking for opportunities to sell back down. So this is my personal bias on the pair to focus on. USD is looking to be very volatile. From Tuesday, we'll see CPI data, and then on Wednesday, we're seeing FOMC. So I want to stay completely away from dollar pairs for until after FOMC rate decision. Now let's look at I spoke about NZDCAD, and that was based on just technical analysis, that's price action. So let me fish it out here. So on NZDCAD, now this is we don't have any interest rate decision affecting any of the pairs. So I would like to trade this based on strictly price action. And on the price action, what we see here is a breakout from this channel. So taking a cue from our formula or the strategy we use to trade channel breakouts, what we see here, this is where the breakout is. So if we take a measurement of the channel, we're expecting price to rally up to this point. So it's already achieving that. We're already over 50% into that target. So what I would like to see, if you go down to H4, you will see that the structure here is also really, really nice, because we are also having these new highs, new lows, new highs, new lows, new highs. You know, very textbook price action structure for an uptrend. So if we pull this up and we're able to find the channel within this H4, so I'm anticipating that price will travel within this channel till we get to our target of 0.8423, and further extension will be to 0.8474. So I would like to see that price will respect this key level and take a bounce from here, which also corresponds, you see that, to the lower boundary of this channel, and then we'll begin to make an upper we'll begin to make a rally. And last on my trading desk analyzed is oil WTI, West Texas intermediaries. Okay, so here I'm looking for further sell-off on oil price. Okay, so what I'm looking at achieving here is there are two things to take note of. One is price could find that needed resistance around here. Let me give you the levels. Around the $72 per barrel mark, or we could find further retracements into the 74.15 level. But ultimately, I'm not looking to go long on this pair. All I'm looking to do is to look for short opportunities. Okay, if price begins to give me those double tops, breakout patterns from here, I will be looking to go in on that. And my target is towards the 68.10 level for the week. This is for the week. So that's how I plan to trade into this week. So traders, this is 1 week we have to be careful. Final interest rate decisions across board for the year, and of course the holidays are setting in, so everyone should just try to trade carefully. This is not time to give back all profits you made in the previous months. Okay, so preserve capital preservation, proper risk management, correlation analysis. This will be the best approach for this week, and not to be too greedy, seeking to make it all in one swipe. All right, traders, I will be keeping us posted in the week. So stay safe. I wish you all the best, peaceful week, and happy holidays ahead. Have a great week ahead. Bye.